people, 25% of the world's gold is hidden in vaults under Wall Street. That's a fact. Why are central banks collectively right now at a 5-year high with regard to their gold acquisition? They're betting against the same system they're forcing us to participate in. The investment banks, look, the richest people in the world are hoarding gold. And I still believe that silver is the most undervalued asset on the planet Earth. And I don't just pull this out of a hat. Somewhere's around the Dow. I'm looking at a Dow potential of hitting 8,000 when we melt down. What was really going on in 2008 when the market started to crash 2009? Was it really about the stock market, the Dow that went from 12,000 to 6,000? Was that really what it was all about? Absolutely not.
Around 25% of the world's gold is stored in vaults under Wall Street, reflecting a high level of gold holdings by banks, which are currently at a 5-year high. Wealthy individuals are also hoarding gold as a hedge against the financial system, while silver remains undervalued. Prediction shows a potential decline in the Dow Jones to 8,000 during a financial meltdown, reminiscent of the market crash in 2008 and 2009, when the Dow fell from 12,000 to 6,000. The focus is on financial consolidation, power dynamics, and the undervaluation of precious metals as protective assets. Gregory Mannarino, a financial strategist, trader, and outspoken critic of the global financial system, emphasizes the importance of diversification, especially in commodities, as they are currently undervalued due to Federal Reserve actions. He advocates investing in a range of assets, including commodities, cryptocurrencies, artwork, musical instruments, and collectibles, instead of relying on cash, which loses value over time. Mannarino criticizes trickle-down economics as a scam benefiting the wealthy through money printing and debt creation, while ordinary people suffer from devalued currency. To address these issues, he argues for higher interest rates and a stronger currency, which would support small businesses and strengthen the broader economy. Mannarino, in a crosstalk with Daniela Cambone, explains the focus on the stock market is a distraction, as it derives its value from the debt market, which is the true indicator of financial health. The debt market is currently in the largest bubble in history, fueled by excessive debt creation, and is headed for a disastrous collapse. Observing the U.S. 10-year yield, a key benchmark, and the falling dollar during recent market drops indicated buying opportunities. Mannarino emphasizes that the debt market is always the primary guide for investment decisions, not the stock market. Let's jump into the video for more details. If you like what you see, please thumbs up and subscribe to our channel to stay updated with our latest content.
Commodities are on sale. And the more the Fed does this, the more on sale commodities are going to go. You got to be diversified here. Greg Mannarino attacks this market in multiple ways. Okay, this market, whatever we have, it's a free-for-all. That is buying the market, staying long the market, buying the dips in this market, owning commodities, gaining exposure to commodities, and yes, of course, cryptocurrencies as well. Other things too, artwork, musical instruments, collectible things. Cash moves through the markets in predictable patterns. When you have this environment of risk on, and it's about to get much more extreme with central banks now going to pump the world full of more debt than we've ever seen before in the history of the world. It's an insane situation here. We do not need lower rates. We do not need a weaker currency. These are economic destroyers. What we actually need is higher rates and a stronger currency, trickle-down economics. That's the backbone of every single developed nation on this earth. What is trickle-down economics? Trickle-down economics is a scam that is being sold to the people of the world, saying if we're going to make the rich even richer and more powerful, because that's all this does. Okay, this trickle-down economics is, and it's supposed to trickle down to the people down here. It don't work. It never works here. There's something called the Cantillon effect. I want people to just do a little research on this here. The people at the top always benefit from money printing, from debt creation, while the people at the bottom, after all this cash trickles down through the economy and finally makes it to them, a process which could take years, depending on how the economy is running. If you have a slow economy or a contracting economy, which we have here on a global scale, it takes a long time. It could take years to make its way. By that time, the currency's lost half of its purchasing power. So the people at the 1% and 2%ers, they get it like an arbitrage opportunity here to use that new currency here, which has purchasing power, and then when it gets down to the lower ends, they get sucked dry. But again, to fix this situation is very simple. We need higher rates. We need a stronger currency. We would build the economy up from the bottom. Is there any secret why we don't have mom and pop shops anymore? The small businesses are basically being erased and fulfilling the corporate agenda. That's what this is all about. and they're destroying all of us via this mechanism. So yes, you need exposure to commodities because they're on sale right now. Risk on is going to turn risk off. Cash eventually is going to make its way into risk off assets. Commodities also get, like I said, cryptocurrencies, artwork, musical instruments, classic cars. I own them all. You got to be diversified. Anyway, so that's really
Yeah.
how it's going to play out. People are being distracted. Everyone's focused on this stock market. The
Yeah.
stock market is a derivative, meaning it derives value from what's happening in the debt market. I watch the debt market. That's all I watch. The debt market is always right. This is an old adage going back as far as you want to go on Wall Street. Okay. The debt market is going to tell people what they need to do. The debt market right now, it's obviously in the it's the biggest bubble in the history of the world. It's being fueled even more. It's going to end in absolute disaster. But realizing when I watched the market falling off of a cliff those 2 days here, two things happened. One is I looked at what the U.S. 10-year yield was doing. Why the U.S. 10-year yield? It's the benchmark. It was doing nothing. It was actually coming down, and then I watched the dollar fall off the cliff. Said, "This is a buying opportunity. This is a buying opportunity."
Central banks are manipulating the financial system, betting against it by hoarding gold while discouraging the public from doing the same. Bank of America might become the next fall guy like Lehman Brothers in 2008, with insiders like Warren Buffett pulling out their investments. Smaller banks are struggling, and the larger institutions, which have direct access to the Federal Reserve, are consolidating power as the system deconstructs. The banking system is fundamentally insolvent, operating in a debt-based black hole that pulls future cash into the present. As smaller banks collapse, larger institutions will acquire their valuable assets cheaply, leaving the public to bear the losses, repeating the 2008 crisis scenario. Bank of America face financial crisis. Its good assets will likely be acquired by other banks, while the bad assets will be offloaded onto the public, burdening taxpayers just as it happened before. During a past financial crisis, Ben Bernanke warned Congress that without injecting billions into the system to free up credit markets, the economy would collapse by Monday. This was a liquidity crisis, not just a stock market crash. Today, we're facing a similar situation where the global economy is contracting while money supply expands, eroding currency value and creating a vicious cycle. Future system lockups could halt all transactions, leaving people unable to access cash, use ATMs, or make payments, effectively freezing the financial system. Let's dive into interview.
Of course, the central banks are going to be more than happy to say, "Hey, you know what? They already have a solution here." They're destroying their own system. They're betting against their own system by hoarding gold, central banks, but they want us to participate in it. They don't want you in gold. They don't want me in gold. No, no, no. They want you and me in the dollar or the euro or whatever central bank you're unfortunately forced to exist under at this particular time. But Bank of America, I think, is going to be the fall guy. It's a repeat
Right.
performance. Lehman Brothers, Bear Stearns here. Now it appears to me it's going to be Bank of America. So he has to do this now. No, I didn't have any foreknowledge that this was being set up. I urge people, look at Bank of America's performance as to its peers. You'll see what I'm talking about here. This bank is underperforming. There's a reason for that. I think more people like Warren Buffett are going to be pulling their cash out of this institution. I say avoid it like the plague. Do what they do. These people like Warren Buffett, they have an insight that you and I don't. Let's be honest, right? You and I can sit here and speculate, and we could try to make sense of what's going on here. But this is what's happening, and it's just too clear to me. So, but the solutions are in our freaking face. We know what banks to avoid. First of all, people need to get their cash out of the smaller institutions. I've been telling people this since before it started. When the regional banks started having problems, I don't know, over a year ago, I was telling people, these institutions have a problem. No loans, no deposits, no deals. Now, the big institutions have the same issue, including Bank of America here. But the big institutions have the main line to the Federal Reserve. What they're doing here, as they deconstruct the system, is consolidate power in fewer and fewer hands. Should make sense to people what I'm saying. So what we're going to see, and this is being hidden from the public, the banking system, first of all, it operates in a perpetual vacuum. It's absolutely insolvent. The entire financial system operates in a black hole which can never be filled. Henceforth, why? Every mechanism that you could think about, dream about, or even have a nightmare over is going to be utilized to pull cash into the now from the future. The debt-based system is a curse upon the world, run by the central banks, and we're forced to participate in. in it. Meanwhile, they're betting against it, the central banks themselves. It's kind of interesting. But anyway, that's where we're going here. So be very leery of what you're seeing, understand, open your mind. Why are these things happening? What we're going to see, there's no doubt in my mind at all, is these smaller banks, the smaller institutions they're going to start to collapse as in a cascade. And what's going to happen here is the big institutions, just like they did, are going to swoop in and buy the good assets off the smaller institutions for pennies on the dollar. And you know who's going to get stuck with the garbage? You are. So am I. We the people are. It's what they did last time, and they're going to do it again. Why? Because it worked. Bank of America, from everything that I look at, and I talk to everybody, and I study this stuff, I think Bank of America is going to be set up as a fall guy. The fall guy. Look what we did, everyone. We allowed this institution to fail. And what will happen is, again, Bank of America's good assets will get bought out by the other banks, and the bad assets are going to be put on our backs. That Ben Bernanke made his way over to Congress on, I think it was on a Saturday, and he went before our loving, caring representatives and told him specifically, he said, if we don't do this, push billions of dollars into the system to free up the credit markets, he said, we would not have an economy on Monday. What we were facing was we're in a liquidity crisis now, but the system was locking up. The system must be fueled with more debt. Henceforth, why we have a global economy contracting, the money ballooning. It wasn't the stock market crash, it was the liquidity crisis. And that's what we're going to face moving forward. We're already in one. We can see what central banks are going to do. We're going to get a lockup of the system again, but this time they're going to say, okay, everyone, these are the people that are responsible. This is the event, but we have a solution. Because once the system locks up, what this means is transactions stop. You go to ATM, there's no cash in there. You can't swipe your debit card. You can't use your credit card. It's just gone. The system will lock up.
The economy is fragile, driven by debt and central bank manipulation. Diversifying into assets like gold, silver, and other tangibles can offer protection as financial risks and consolidation grow. How are central banks and large financial institutions influencing the current economic landscape? And what potential risks does their behavior pose to smaller banks and the general public? Share your thoughts in the comments below. We'd love to hear from you. If you found this video useful, don't forget to give it a thumbs up and subscribe for more content. Thanks for being a part of our journey.